You were just saying that you think now might be time to kind of rotate out of the US into other markets. Would China be one of them if you believe there's going to be significant stimulus from the PBOC?
I'm not sure there's going to be significant stimulus. What they want, they have shown they're reticent to basically do significant stimulus. What I think they'll do is lowering of the reserve ratios, things like that. There'll be subtle stimulus, and that should keep the economy moving along. I don't think it's going to be a massive stimulus that you really want to chase right now. We do have some Chinese companies. We own Alibaba, we own Tencent, so these are the big technology type companies in China. We own them. They're reasonably attractive versus US multiples, we think. Japan's where we're really looking to allocate right now. I think that's the area that's cheap right now. I talked about the US at unprecedented multiples almost. China's cheap versus its own history on earnings. You're getting a dividend yield of 2.5%, which is very attractive versus negative interest rates in Japan. So if you are looking to rotate out of the US, China's where I'd be putting my money right now. Or
Japan, yes. And also, I guess, because it would be one country that would benefit if we do see a positive resolution to the trade war, or at least get some sort of phase one through. In general as well, then, how would you be looking for protection? Is yen your preference, gold your preference?
Yeah. What we're actually doing is buying domestically oriented Japanese companies. So companies like Japan Post, NTT Docomo, they're not exporting companies, but the Japan consumer's been very resilient. We're getting about a 5% dividend yield on these companies as well right now. We want to be long yen. We don't want to pay the negative interest rates. Buying domestically oriented Japanese companies that pay a dividend yield is a great way to be long yen right now, we think.
And gold, you like it in the portfolio right now, or not so much?
I like it because it's a hedge against the biggest issue that everyone's buying everything on right now, is basically if we don't get a trade deal, you have an escalation of the trade war. And trade wars, if they do keep moving forward, turn into currency wars. And that's when gold will really shine, basically, not to make a bad pun on purpose, but gold will serve a great role in a portfolio if you do get into currency wars, which is the logical extension of trade wars if they do continue.